Okay, so a really important topic here, credit score. So what actually goes into making up your credit score? What's considered and how does that whole process work?
Good question, Max. There's a few things that go into your credit score, and so I see the biggest thing is payment history.
Hmm.
So make your payments on time.
Okay.
It's as simple as that. I mean, you have a due date for say a credit card bill or an auto loan payment. Typically, there is a grace period,
Hmm.
but really the problem is if we hit the 30 days late, because then that will count as a late payment on your credit score.
Okay.
Yeah. So pay things on time.
Mhm.
It's big. The other thing would be pay down debts.
Mhm.
Credit cards are a big one. I would say, if you've got five or $10,000, $20,000 in credit card debt,
Mhm.
a great way to improve your score is going to be to pay that down. A big factor is the amount owed on your credit cards
Mhm.
versus what the actual credit limit is.
Okay.
Too.
Right.
So a good place to be is 30% or less total balance owing on your cards compared to what the credit limit is.
Okay. So just showing that you're paying things off as you use it.
Exactly. I mean,
Okay.
so you got $1,000 card, $300 or less is great. Is a great place to be. It shows that you're using your credit, that you're being responsible with it, and that you're keeping it at a manageable level.
And what about this? I had a client recently that was only given a couple of loan options because they had only one line of credit. Is that a factor? The number of lines that you have?
It is. I think a good place to be is three credit cards. One you actually use, two are basically like reserve cards.
If you do meet with some folks and they're not quite as from a credit standpoint in the position they want to be to qualify for the loan, to get the house they're looking for, or what they'd like to get, can you help them identify ways to really strengthen their credit and give them kind of a time frame on that?
Yeah, there's always a plan. A lot of people that come to me, if they've got a not so perfect credit score, they think it's not even worth it. I'm done. I've got no chance of buying a house, and that's just not true. I'd say if your credit's very low, you've had some recent late pays, things like that, you can still get a personal loan. Likely they'll want it to be a secured loan, so maybe you freeze $500 with the bank or the credit union, and they issue you a $500 loan. So it's no risk to the creditor, but it allows you to establish credit history. You can do the same thing with credit cards too. They can freeze a set amount and then issue a card. So you're actually building credit, and it's no risk at all to the bank. So they're willing to do it for you, and it's a win for you. Yeah,
that's really creative. So in general, in relation to credit scores, what are you looking for as far as credit scores go? What's good?
Typically 620 or higher, we can make something happen for you. The higher the credit score, really typically the lower the pricing that you get. Things like that, closing costs, interest rates can be a little bit lower if you have a higher credit score. A lot of times that is a thing where it's there's two borrowers. Say borrower one, higher income, lower credit score.
Mm-hmm.
Borrower two has great credit score, but their income isn't as strong. So we need both of them.
That
make
makes
it
sense.
happen, but we have to use the lower credit score. So
oh man,
yeah,
that's kind of the situation I think Natalia and I found ourselves in. But I didn't realize that we were there. Yeah, but she definitely has better credit than me. But we were brought down to my level.
Yeah.
Okay.
Exactly. That's what established the present.